So if you own a house in Ireland, you have an estate. Hi, I'm Pascal and I'm a financial advisor in Donegal, and I've been advising people and helping people make prudent financial decisions for well over 30 years. And one of the things I always hear is that estate planning and inheritance tax planning is only for the wealthy. And nothing could be more further from the truth. And what I said at the start is if you own a house, you have an estate. If you have a death in service, you have an estate. If your employer pays out a lump sum if you die, you have an estate. So this short video is going to take you through the 4 documents that you should be considering, depending on where you are in your life cycle, in terms of financial planning. And things that we're going to look at is what exactly is financial planning? What are the 4 documents that you should look at? What is the different groups? So where do you fall in terms of the thresholds for tax relief on all of these inheritance taxes? And what reliefs can be available to help you reduce the bill? And why do we, as people, and by the way, we're all the same, we put this off? So let's go. So what estate planning really is, it's not about death. It is really about control. Deciding what needs to happen when you're not here to make it happen with all the wealth that you've worked so hard to accumulate during your working life. And what are the 4 documents we should look at? And by the way, most people are shy on 2 of these at least during their journey. So obviously the first one is a will, and this is where people sort of engage with us as a start, and this is where most people sort of get into the conversation about estate planning. And without a will, the Succession Act dictates what happens to your estate, whether that's what you want or whether it's not. And by having a will, it just makes sure that your wishes are adhered to rather than the Succession Act actually kicking in. Trusts. This conversation is coming up more and more, and it's coming up more and more because house prices are increasing, the value of estates are increasing, and trusts are an important element of estate planning, especially where we have complex family dynamic, children with special needs, people within your life with special needs, where there's a complicated family profile or family dynamic, or where you just want to ring fence an asset for a particular purpose. A trust can be something that can be brought into play for that. And enduring power of attorney, and this is where it gets people get a little bit tetchy when we talk about this. And the important piece here is that when you realize that you're not mentally or physically able to manage your affairs, it's already too late to appoint somebody. So the point is, appoint somebody early before this happens. And really there to look after you and to act in your best interest. The other one that people kind of miss a lot of the time is an advanced healthcare directive. And this is where you just set out what you want to happen if and when your health changes. And it's important to talk to your doctor, talk to your family, because sometimes with all the goodwill in the world, family want you to fight a little bit harder, family want you to do everything that you possibly can, but maybe that may not be what you want. And I know that kind of irks to people, but sometimes family, it can be difficult for them to let you go. So sometimes having that directive in place, it sets the scene for everyone. What are the thresholds? And this is where some people get a little bit mixed up as to where you actually sit. Now, the first one is Group A. I mean, this is quite simple. From parents to children, the threshold in your lifetime is 400k. And in your lifetime is important because you could inherit something very early and something later on in your life, but 400k at the minute is the threshold in your lifetime. If you inherit above that, there is a tax of 33%. And what we say when we mean inherit, it's not just about cash, it's about property, it's about assets, it's about fixtures and fittings. It can be a business, a farm, it can be cattle, it can be a tractor, it can be whatever it is, but the point is you're inheriting it. If it has a value and everything has to be valued, then it falls into the thresholds. Close relatives are, shall we call them Group B, and that can be your siblings, your nieces, your nephews, it can be cousins and blood relations. And then strangers. Everyone else falls into the stranger cap or Group C, and it's €20,000. And this is where it gets a little bit tricky. If you're a couple that are life partners, you've bought a house together, you have a family together, but you just haven't put a ring on it, technically you fall into Group C, and this is hugely important when it comes to inheritance. If you bought a house together, if there's a death in service and you've got kids and you want your money, you want your estate to be transferred to your life partner and your kids, this needs to be planned. There are a couple of reliefs that you can bounce into. The family home declaration or the family home exemption is there. There's rules and regulations in terms and conditions, but it's important that can reduce the tax bill. If we're talking about a business or a farm assets, there are reductions for the people that qualify. Again, terms and conditions apply, but there are reductions that can come into play. It's important to know what category you fall into. And what I find quite a lot, especially as parents get older, we have children trying to help parents out, but the threshold for that is 40k, it's not 400. It's 400 from parents to child, but not the other way around. So again, advice is critical here, guys. Why do we put it off? Why do people put this off? And estate planning is probably one of the most postponed financial decisions, not just in Ireland, anywhere realistically now, but in Ireland we're not good at this one. And the reasons are very human. Tempting fate. And I've always heard this, I wouldn't want to tempt fate. This is like, I don't want to talk to my dentist in case of a problem. Like, doing something and planning something doesn't make it happen sooner, doesn't bring it closer to you. But what it does mean is that your wishes, rather than the Succession Act, comes into play if and when something happens you. It is not bringing it closer, guys. There will always be something more urgent is another one. There's always something, especially when it comes into financials, your mortgage, your kids, your holidays, your changing the car. If you're working for a company, their next quarter or their end of year, their financial planning comes before yours, which sometimes we might need to question that one. But a lot of us are the same, and we put off this kind of stuff. The cost for people left behind is a big one. If you put off making important decisions with your estate, this is where problems happen. And then the burden of all of this falls to the people that you love and the people that you want to inherit your estate, but comes with issues in a time that they can't handle them. And we've all heard the horror stories. We all know of families and siblings that have fallen out. Unfortunately, I see this every week. Families are falling out over a few pound or a bit of land, and a lot of it, it's nonsense, and a lot of it's greed, and a lot of it can be prevented by you taking the time to sort this all out before you go. And more importantly, when you do decide what you're doing, tell the people in your life, because there's no point you doing it for them to have a problem. If they have a problem with what you're planning to do or wishes, let them sort it out with you, not fight amongst themselves. So you don't need to figure this out alone. You just need to start the conversation. And this is where we're encouraging people, when you're dealing with your finance, it doesn't matter whether you're talking about buying a house, putting in place life insurance, the question about a will must come up, should come up. You definitely should put a will in place if you have any kind of an estate. If you're going to leave anything to anyone, it needs to be in a will. Trusts, obviously, depending on the financial or the family dynamic. Enduring power of attorney. I find people engage with that a little bit later in life, whereas they feel, well, listen, my health is sort of deteriorating now, I need to fix this up. Do this before your health deteriorates to a point where you can't do that. Healthcare directive, guys, you can see where that would be very, very important. And then CAT planning, capital acquisition tax planning. What group do you fall in? What are you inheriting? What's the tax bill? What are the things that people can do to sort of mitigate some of this and avoid some of this? And then reliefs. Is there a relief that you can bounce into? Guys, the important thing here is to start this conversation. And if there's anything that you've got questions on, anything that you're confused on, this is what I do. Reach out. I'm more than happy to help you with your questions around estate planning and inheritance tax planning. Give us a call, send us an email. I'm here to answer your questions.